Achieving financial freedom is a goal for many, but it often feels overwhelming. The simple formula to reach this state involves three key components: earning, saving, and investing. Understanding how these elements work together can transform your financial future. Financial freedom means having enough income to cover your living expenses without relying on a paycheck. This matters because it allows you to pursue your passions, enjoy your life, and reduce stress related to money. The essence of financial freedom lies in creating a sustainable income stream that supports your lifestyle and goals. At its core, the formula for financial freedom is straightforward. First, you need to earn money through a job, business, or other means. Next, saving a portion of your earnings is crucial. Finally, investing those savings wisely can help your money grow over time. Each of these components is interconnected and supports the others. Let's break down how this formula works. Suppose you earn $50,000 a year from your job. A common rule of thumb is to save at least 20% of your income. In this case, that would be $10,000. This savings can then be invested in various assets such as stocks, bonds, or real estate. The goal is to see your investments grow, ideally at an annual rate of return of 7%, which is historically average for the stock market. Now, let's look at a concrete example. Imagine you save and invest that $10,000 each year for 30 years. If you achieve a 7% annual return by the end of that period, you could have approximately $1 million. This illustrates the power of compound interest, earning interest on your initial investment and on the interest that accumulates over time. While the path to financial freedom is appealing, it's important to recognize both benefits and limits. The benefits include reduced stress, the ability to pursue your interests, and the freedom to make choices that align with your values. However, achieving financial freedom requires discipline. It often means delaying gratification and making sacrifices in the short term for long-term gain. Common mistakes can hinder progress toward financial freedom. One mistake is failing to create a budget, which can lead to overspending. Another is not starting to invest early enough. Many people wait until they feel financially secure before investing, but this delay can significantly reduce the benefits of compound growth. Lastly, some may invest without doing proper research, leading to poor investment choices. To get started on the journey to financial freedom, follow these clear steps. First, create a budget to track your income and expenses. Identify areas where you can cut back and increase your savings rate. Next, open an investment account and start small. Consider a low-cost index fund as a beginner-friendly option. Over time, increase your contributions as your financial situation improves. Summarizing this journey, achieving financial freedom is a combination of earning, saving, and investing wisely. Each step contributes to a more secure financial future. Learning about personal finance is a vital step in gaining control over your financial life. Embrace this knowledge as it empowers you to make informed decisions.